Hey everybody, my name is Kyla. Welcome to my channel where I talk about the stock market and the economy amongst other things. Today I'm going to be talking about the total timeline of the SBF FTX situation. I've made a couple of other videos on it, but I wanted to quickly recap everything that's happened here since November 2nd. It has not been that long. I'll go ahead and link all my sources cited below so you can go and check that out if you want more information. The way that you can sort of think of the SBF FTX situation is that it was really focused on betting big. Everything was really focused on making a bunch of money, at first through financial engineering, as you can see through the former CEO of Alameda, but then they got into fraud. Everything got out of hand for Alameda and FTX when the crypto market started going down. Turns out it's really easy to make money when market go up, but really difficult to make money when market go down. As I recapped in other videos, there is a dynamic between Binance and FTX. So Binance is one of the top centralized crypto exchanges. FTX was another one of the top centralized exchanges. SBF, who was the CEO of FTX, was really focused on regulation, really focused on maintaining power in the industry, and really just focused on making a bunch of money because he was an effective altruist. And the goal there is to make a bunch of money so you somehow distribute it back to the world in some sort of way, right? It worked until it didn't. FTX was a huge powerhouse in the industry. They were bailing out companies up until like a week ago, right? They were associated, but not really at the time, with this company called Alameda. Alameda was a venture fund. FTX made a lot of money from Alameda. There's knowledge that Alameda and FTX were essentially like one and the same thing. Like FTX revenue helped Alameda to do trading strategies helped to fund FTX. And so on November 2nd, Alameda's balance sheet was leaked by CoinDesk. And then everyone was like, oh wow, all of a sudden everyone was like, oh wow, Alameda has about 14 billion in assets against 8 billion in liabilities. So they have 3.6 billion of FTT, 2.16 billion in FTT collateral. They had some exposure to Solana, some exposure to Robinhood equity. That's when the alarm bells started ringing for everybody. But if you zoom way out, FTX had been like the flashing fire alarm for a really long time, but nobody was looking at it that way. It seemed like what they were doing made so much sense because they were safe, because they employed, Tom Brady essentially to do advertising. However, once this Alameda balance sheet was leaked, everyone was like, oh my God, maybe it's not. It turns out that FTX had lent about 10 billion of client funds to Alameda, who had used them for leveraged crypto speculation. Alameda blew up when all the crypto funds were blowing up. SBF ended up bailing out Alameda with customer funds secured by FTT, which is why that showed up on the balance sheet, as well as Robinhood equity, of course. FTX had about 16 billion in customer assets, so it turns out FTX lent more than half of its customer funds to Alameda, which is not good. Alameda CEO Caroline, who has a wild Tumblr page, said that they knew that FTX and Alameda were commingling funds and that she was sorry about that. But only 4 people in the company knew: her, SBF, and 2 other FTX executives. Everyone else was in the dark at FTX. And it seems like the reason that Alameda lost so much money is because they were not very good at trading. They were getting too aggressive on the VC side. They had huge margin positions and they were letting them run, and basically they just blew up. So they were stealing customer funds in order to make these payments. However, once lenders started demanding back their loans, Alameda was like, oh, actually, we can't do this. So they even front running. They weren't good enough to win, which is like kind of impressive, honestly. Alameda had pledged this illiquid collateral to borrow money to finance these bets. They got margin called when the markets went down, and then they stole FTX user funds to help close this hole. And I'll talk about how this hole was opened up to the world in terms of FTX and Binance in just a second. SBF had built this backdoor into FTX, allowing him to alter the company financials without letting anybody know. So he was able to make all these changes behind the scenes. This backdoor allowed Alameda to borrow from FTX an unlimited amount. So if you deposited $1 million, that's Alameda's $1 million actually, and they're going to make these wild bets with it. And SBF actually has this clip where he's talking with Matt Levine about using customer funds and buying up other companies, and it seems like Binance kind of got a whiff of this. SBF had been toying with fire because he was doing regulation. He was doing a lot of regulatory work in the United States. He was regulating like against Binance. He was regulating against DeFi. He just wanted FTX to win. So CZ and Binance, CZ, there's so many acronyms. CZ and SBF go way back. Binance had actually helped prop up FTX at the very beginning of FTX's journey. CZ had starved FTX of revenue, had done 0% trading fees, and they took a bunch of volume from FTX with that. And so Binance decides to sell its stake in FTX about a year ago because they took $2 billion of this FTT token. So this token that I actually mentioned earlier, but it's the token that FTX uses for trading. So basically, if you own this token, you get discounts on trading. You were part of the FTX ecosystem if you have this token called FTT. So Binance had about $2 billion of exposure to that. Then all of a sudden CZ was like, oh, we don't want this anymore. We're going to sell it because we see this FTT token as quite similar to Luna, which blew up. Basically, CZ, the CEO of Binance, tweets out and he says, hey everybody, FTX is just like Luna, which just blew up because that coin, the Luna Terra ecosystem, it wasn't actually real. We're saying FTT is the exact same thing. And so of course a bank run happens because people are like, oh my gosh, FTT is just like Luna. And people got scared and a bunch of money was drained out of FTX. And so Alameda says, hey, CZ, don't worry, we'll buy up all these FTT tokens for you for $22 a pop. What do you say? FTX is flailing at this point. There's a bank run happening. Alameda is flailing because FTX is failing. So Binance says, hey, don't worry, like we'll step in, we'll save you. But actually, they took a look at the books and they were like, no, we won't save you. You mishandled customer funds. And also, wow, this is a nightmare. SBF is tweeting this whole thing. And he's like, don't worry, FTX is fine. Like we're doing okay. But we're going to stop processing withdrawals. So if you have money locked up in FTX, it's fine, but it's not. SBF is now, he paused withdrawals and now he's going to go try and find about $9 billion for exchange to try and save the exchange. FTX and Alameda are completely unraveling. There's just like a whole downward spiral. FTX says that withdrawals can happen for people who live in the Bahamas, but that was not true at all. And so it turns into this whole like black market for NFTs and Bahama accounts associated with FTX. So like that's another example of a great thing to get this guy in jail for. If you're listening, regulators. Then eventually FTX files for bankruptcy. All 134 of their firms file for bankruptcy. That is a lot of firms and it is a total tangled mess. SBF resigns as CEO. John J. Ray III, who oversaw the liquidation of Enron, is now CEO because, of course, FTX has more than 100,000 creditors and between 10 to $50 billion in assets and liabilities. So they're going through bankruptcy. It's a whole nightmare. Huge gap in between like 10 and 50 billion. That's quite a big number. So Binance steps in and they're like, okay, wow, there's a bunch of contagion happening. Remember, Alameda was doing risky crypto venture bets. So all these companies that they bet money into or they invested money into, now it's like, what is going to happen there? So Binance becomes essentially a central bank. And that might be an unpopular thing to say, but that's essentially what they do. They say, hey, listen, we need a lender of last resort, and that's going to be Binance right now. They also have released NFTs with Cristiano Ronaldo. So they're doing just fine. For CZ and Binance, like this is a big opportunity for them to take a bunch of market share and also to gain industry credibility and also to make sure that the same thing doesn't happen to them. Like if they're able to talk to these companies that Alameda invested in, they're probably going to get some insight on what happened and why and make sure that they don't end up the exact same way. And so FTX's balance sheet was released during this whole time. It's an absolute nightmare. There's like just absurd. It's all in Excel and it makes no sense because it's not how balance sheets work. It's tiered liquidity. So like they have liquid, less liquid, and then illiquid investments on their balance sheet. It doesn't match. Most of their assets are either illiquid venture capital investments or crypto tokens that are not traded. And a lot of their ownership was hood equity. Like that is the most liquid thing that they have, Robinhood equity, about $500 million of it. There's also $7 million of something called Trump lose. There is this negative $8 billion entry described as a hidden, poorly internally labeled fiat ad account, which is apparently $8 billion that Sam Bankman-Fried just accidentally sent to Alameda, because who doesn't accidentally press a button to send $8 billion to the company that you're not associated with, but you totally are associated with? It like happens to the best of us, right? Also, their two largest asset balances were about $5.9 billion of FTT, so this token that they made up, and also $5.4 billion of something called Serum, another token that they made up, but that is on Solana. So basically, it's like, as Matt Levine described it, like the decentralized exchange version of FTX. Is something that they helped to spin up, and it's something that they helped to spin up and something that they own a large portion of. And so these were just marked to market on the balance sheet. What that means is like it's just valuations. Like it's not intrinsically able to be valued that way. Like you can go and try to sell Serum on the open market, you can go and try and sell FTT on the open market, but it's not going to be liquid. Like it's not going to sell. Like you can, I can say like, oh my gosh, my hand solve is worth, $5,000 and I can list it on the market. There's a difference between pricing something as something and then having that something sell as that. It doesn't seem like users are going to be able to get a lot of money back, according to research from the block. Millions of people are going to be impacted by these decisions, of course. It's not a joke. The New York Times released this huge puff piece about FTX and SBF last night, and they were like, don't worry, everybody, he's playing the game, hit an ad for the game that he made, and he's sleeping. So, like, don't worry, everybody, he's doing totally fine. SBF is doing this weird cryptic tweeting stuff, and he says Alameda had more assets and liabilities, marked to market but not liquid, which makes 0 sense, and margin position on FTX International, and they had more than enough money to repay all customers. FTX is in a solvency crisis. What they have to pay people back is nothing. Like, they lost the money. They lost it in these risky bets. Now a bunch of people are totally screwed over because of these horrible decisions by FTX and SBF. And also these, other rats are crawling out of the sewer. So Zuzu is talking. So the big question is, like, what's going to happen? Is he going to go to jail? I'm not sure. Who knows? All of this is just really beginning, but they're trying to raise money again. FTX is trying to raise money again. They filed for bankruptcy last week, and they're going to hit the ground running and with this weird way of raising money that absolutely doesn't really make a lot of sense because the terms are sort of wonky, and also who's going to give them money. The VC companies absolutely failed in terms of due diligence, so let's see if they do it again, right? It's a mess. So that's kind of the whole thing. Basically, it was a bunch of really risky bets. It was a commingling of a venture fund and an exchange, quote unquote. It totally took advantage of people and trust because FTX was able to get huge advertisements. They were able to get Tom Brady. They were able to be on telephone poles. And now all of a sudden, that's not true anymore. That's sort of the whole timeline for right now. We'll see what happens with FTX and SBF. It's probably going to be a relatively long legal road. And I also wrote a piece about it this weekend called Trust, really just reflecting on how disappointing it is. Yeah, hope that y'all are doing okay. Talk to you soon. Bye.